With better than expected numbers, China's economy got a good start for 2017. What are the prospects for the rest of the year's economic performance?
We believe that the Chinese economy will continue to be a strong driving force in the face of a sluggish world economic recovery. As for China, insufficient development will present the biggest threat to this country.
Despite the overall growth rate, stock and bond markets have experienced sluggish performance. What's the best way to cope with the uncertainties in China's financial markets? Faced with external and internal challenges, China is at risk of systematic financial problems. What steps can be taken to avoid this? As China restructures and upgrades its economy, what are the major driving forces for growth both now and in the future?
In the first quarter of 2017, the Chinese economy experienced a growth rate of 6.9%, and the major indicators for April continue to show positive signs of growth. However, confidence in the sustainable development of China's economy is being dampened by uncertainties in the financial market. To discuss the problems and prospects for China's economy in 2017, I'm happy to be joined in the studio by Professor Paul Gillis of the Guanghua School of Management at Peking University and Charles Liu, founder of How Capital. We shall also be joined via satellite from Shanghai by Yuping Kang, Chief Economist at Changjiang Pension Insurance. That's our topic. This is Dialogue. I'm Yang Rui. Well, Central Economic Conference was held by Xi Jinping recently to prevent the systematic financial risks. I wonder if you have been alerted to the potential hard landing if no sufficient measures are to be rolled out just in time.
You know, I think China has worked its way through the risk of a very serious hard landing, and I think the strength in the economy in the first quarter looks like we've probably already bottomed out, although I think growth may slow the rest of the year.
You sound a little bit optimistic. What do you think?
I totally agree with Paul. I think the situation in terms of the financial markets, in terms of the stock market and the bond market, is really an issue of squeezing the bubbles out. And that is absolutely crucial, first for preventing a systemic risk, but secondly is to bring more focus and attention onto the real economy, which will be a good thing.
And what do you think of the monetary and the fiscal policies, particularly the alleged proactive fiscal policy has triggered a sharp increase in fiscal deficit? And do you think that's how we learn from Trumponomics?
You know, I think what we can expect the government to do is to try to use a prudent fiscal policy, to not be too aggressive at trying to micromanage or adjust the economy. I think right now, I think the biggest concern is the high levels of debt. And I think what we will see is attempts to tighten monetary policy in order to reduce the levels of debt, and that reduces some of the risk in the systematic risk to the economy.
He put his finger on the outflow of capital. Do you think that's going to be a major problem?
Well, there are normal outflows of capital, and they are surreptitious outflows of capital. One of the biggest things that happened in the last 2 years, I think, is China has all of a sudden become a capital exporter. And whether or not they are...
Because of 一带一路?
No, actually because of acquisitions abroad. Many European technology companies have been acquired by China, and there's been large-scale investment by Chinese companies for various purposes to acquire assets abroad. That's part of capital, being a capital exporter. Instead of sitting in U.S. treasuries, hopefully this can go into something that is more productive. But the capital flight part, capital outflow and capital flight, the capital flight part, I think has stabilized quite a bit over the course of the last 6 months.
Look, gentlemen, recently financial regulators in China have taken bold steps to root out irregularities and plug potential legal loopholes. Now, earlier this year, the central bank introduced the macroprudential assessment system to gauge financial institutions' risk exposure, hoping to put a lid on fast-growing off-the-book credit offerings. The two watchdogs, the China Banking Regulatory Commission, stepped on the gas in late March, issuing 7 policy documents in 10 days to increase scrutiny over the banking sector, whilst the other watchdog, the securities watchdog, the China Securities Regulatory Commission, also lashed its whip, imposing 5.5 billion yuan in penalties on companies found to be issuing fraudulent data for engaging in other malpractices in April alone. What do you think of the severity of such crackdown?
Well, I mean, these were very bold moves, but necessary moves. What I think they do in the long term is they will make China's system less risky. In the short term, though, they have a tendency to reduce the expansion of credit, which is actually a good thing for the economy, but it will slow the economy a little bit. Because easy credit does make the economy grow more quickly.
I'd like to add something to what Paul said in this. I think the plan is wonderful. It's in the execution, and whether or not it could actually achieve the objectives that it set out to achieve. It's not an easy thing. The Chinese expression, 上有政策,下有对策. There are many who are in the business sector who can always find ways around the policy directives, and that would be the risk.
Let me go to Mr. Yu Pingkang, Chief Economist at Changjiang Pension Insurance, who's standing by on satellite. Hello, Mr. Yu. We were discussing.
Hi, hello.
We were discussing the high-handed policy issued by the two watchdogs, the Securities Watchdog and the Banking Regulatory Commission, to reduce impact of loan expansion. What do you think of the negative impact upon, for example, the growth of the SME sector? Mr. Yu, I'm asking you, what do you think of the impact that the two watchdogs delivered on the growth of the small and medium-sized enterprises? In other words, how do you assess the impact upon the real economy?
Well, I think a healthy real economy has to happen with the healthy financial markets. That's a key of the very key point of the whole point of the monetary policy. That's called a transmission mechanism of monetary policy. To a great extent, is called a financial accelerator monetary policy. That means when these monetary policies start to tightening up, when it starts to go into deleverage of the financial sector, then even though in the short run it will have some impact on the financial markets, but in the long run it will be healthy to the economic growth. For example, it will help pump the money back into the real economy. In the recent decades, in the recent several years, right, we have seen the money has been circulating within the financial markets. The leverage in the financial markets has been rising dramatically, while the real economy, particularly in the credit market, the small and medium companies really have some difficulties to get the credit, get the loans. I think that in that regard, the new policy introduced by the financial authorities in China really will help boosting the real economy in the long run.
Charles, do you think the severity of the two watchdog policies is actually part of the new normal economic growth? In other words, the supply-side economic restructuring.
Right. Well, I think the whole world is going through the same thing. We have a situation in which the U.S. and now the Fed is talking about shrinking its balance sheet, raising interest rates, and the European Central Bank is also looking at the possibility of starting something this year. And when the credit bubble on a global basis shrinks, if China continues, then there are some serious issues that China will face. In the long term, putting money back into the real economy should be the objective. But in my practice, this is what I'm afraid of, is the banks are not structured and are not, let's say, the way they function still is pretty much the old way, in which the SOEs, the big SOEs, get all the credit, and the small, medium-sized companies don't.
I'm afraid no one is more clearly aware of the dangers of having a sluggish SME growth in the Chinese economy, and therefore, what do you think of the effectiveness of the tax reform in China?
Well, I think tax reform in China, taxes in China are paid primarily through value-added taxes that do that. The corporate tax rate is kind of an average corporate tax rate around the world at 25%. I think the business tax reform was a good move to integrate that with VAT, and it should provide some effort to stimulate the economy going forward. But I think China's got to look at the many other taxes that are out there, and and I think the simplification and lower rates is probably the future for China.
Is it easier for the SME to have access to loans from, the official side?
Well, the unofficial channels has been very active.
Shadow banking?
Shadow banking has been very active, but they're euphemistically called people-to-people lending or private-to-private lending. And
what about online payment?
Online lending.
Yes,
like
online phone loans.
Well, those are basically very small amounts. It's not big amounts. I've invested in a company that is doing that now. It's doing very, very well. Mm-hmm. The new regulations on that came out last year to kick a lot of the bad guys out of the market. It went from 7,000 online lending entities down to under 1,000. So I think the regulatory agencies on that is really doing quite a good job.
Mr. Yu, what do you think of the underground banking for SMEs which find it very difficult to have equal access to loans from the government?
Right, that's true. So, the shadow banking, the existing shadow banking has its ground. The shadow banking really serves the purpose that the formal banking system cannot serve properly. That particularly for those small and medium companies that have difficulty to get loans from the formal channel. But on the other hand, the shadow banking, particularly because it's out of the system, then it's hard to regulate. And then it's easy to get into those kind of bubbling mechanism. That's what we have observed in recent years. Then there's the interbank lending system, for example, has been substantially ballooning in the recent year. And that's why these financial deleveraging policies introduced in recent months start from this area. So I think that it has a good side and it's a bad side, the pros and cons. So we have to look at it from both ways.
Well, the first quarter saw 6.9% of the GDP growth rate, and that shocked everybody, particularly those overseas observers who follow the development of the Chinese economy very closely. However, when you visit, I'm not talking about the fact-finding tour of the local economy, but when you did talk to local government officials, they were all complaining about the lackluster performance of their fiscal revenue. They were wondering aloud where the next growth point should be, like properties, or bubbles in properties will start to are to burst somehow. There's at least such a danger. So what do you think of the financial vehicles or financing vehicles for local authorities? They have already come under huge pressure for whatever forms of debt, right? Mm-hmm. Paul and Charles.
I think to start with, I think selling land for real estate was their major source of income for a long, long time. And there is.
But I'm afraid the massive scales of land revenue is
not going to come.
Grounding to a halt.
That's right. It's not going to come. It will have to come from taxes. But in terms of taxes, the split between the local government and the central government, those are issues which have to be addressed in due course. And I'm sure the government is looking into that now. I understand the Ministry of Finance has been studying this issue for some time and has yet to come to a conclusion. And there are other channels, sorry.
No, go ahead.
There are other channels which are for fiscal revenue which has not been used yet in China. For example, a estate tax, for example, real estate tax. All of those things which are actually used all over the world but have not yet been implemented in China.
Thank you so much. You are watching Dialogue with Paul, Charles, and Ping Kang. We're discussing whether the Chinese government is able to prevent the systematic financial risks and whether we're going to sustain the robust growth rate that we saw in the first quarter of this year, 2017. We'll be back in a short while. Stay with us, please. Welcome back. Now, the foreign trade that we have still enjoys some kind of surplus. It means world economy is not very bad. But let's look at the influence of Federal Reserve raising the interest rate. Do you think it delivers some kind of impact on the Chinese economy?
Well, I think it does, because I think it does create some flow of money towards the U.S. when the U.S. rate goes up and the U.S. exchange rate strengthens as a result of that. I don't think that very many Chinese investors go to chase a small increase in the U.S. rate, but it does put some pressure on towards capital flight.
What do you think of the Federal Reserve?
It would certainly have some impact, but what we saw in the last 2 weeks is the dollar started to come down very, very substantially. There are just so many imponderables in the U.S. now. The stock market is at all-time high. Once again, the PE ratio is at all-time high, all on the so-called Trump trade. Now, whether or not the Trump trade involving $1 trillion on infrastructure, creating more jobs, getting 4% growth rate, whether or not, and a new tax system, if they cannot even get the health care measures through, I don't think any of these things will be through anytime soon. So whether or not there's an escape from the U.S. market is a possibility. We have to look at the global pool of capital as just that. It's a global pool. Those who would trace the 20 basis point, 25 basis point are the very large institutional, financial institutions who may move money to the U.S. if they get the 25 basis point. But if the dollar cannot be stable, then there are risks involved. I don't know, Paul, if you agree.
I agree with you completely on that. I think there's a lot, the political uncertainty in the U.S. right now, I think, is the biggest overhang on all of this.
Yes.
And that is, if you don't see major tax reform that's expected and you don't see an infrastructure package that's expected, I think the markets, U.S. markets particularly, may be due for a big correction.
That's right.
And that would spill over to China.
Let me cross to Ping Kang Yu for his comments. Hello. What do you think of? Do you think depreciation of U.S. dollar is the first casualty of domestic politics in the United States? And what do you think of the efforts for Federal Reserve to raise interest rates?
Right. Of course, there is always daily fluctuation in the financial markets and also in the currency markets. But I think that looking at it the other way, the very reason that the Federal Reserve can comfortably raise interest rate right now is precisely that the economic growth in the United States, is going to be sustainable. Just look at one measure, that the potential GDP growth rate published by the Congressional Budget Office of the United States has indicates that the potential GDP growth rate of the United States can be sustainable in the next decade. It starts to hit the bottom around mid-2016, that means around mid-year last year. Then afterwards, it will start to rise very gradually all the way until the end of 2022. So during this process, even though there's some short-term fluctuation around this potential GDP growth rate, but the trend is not reversible. So that means the Federal Reserve can comfortably raise interest rate without damaging the economy. And on the other hand, the monetary policy has to be forward-looking. In the United States, usually around half year or 1 year to 1 year horizon that forward-looking. So in that regard, I think that the financial market and also in the United States and also globally are responding favorably. So I think that even though maybe it will have some short-term impact, negative impact to the financial markets, but in the long run, I think it is sending a very healthy signal to the markets around the globe, that, including the Chinese market, that the economic growth in the United States is picking up.
Following the success of the Mar-a-Lago summit meeting in Florida, I believe, and most observers who were worried about the Trump policy say that the trade war has been narrowly averted, with China raising what is called the 100-day economic initiative to strengthen the ties and bonds between the two biggest economies. What do you think of the relationship between our two economies?
Well, I do think the trade war seems to be averted. I think both the discussions with China and some of the changes in policy there, and then also the backing off from signaling the end of NAFTA, I think both indicate that trade is probably not going to be at the top of Trump's agenda where it appeared it was going to be. And I think that's encouraging. I don't think China's out of the woods yet, though, because I think China's continued surpluses are likely to draw attention, and that is one of the risks that China's economy faces, is that there could be pushback against China's trade balance or
Charles,
trade imbalance.
why do you think the U.S. government and Trump has removed quietly the label of grand champion of currency manipulation by China?
You cannot justify it by facts. Well, they've justified many things by non-facts, but you cannot justify it by facts. China has done everything it can in the last 2 years to maintain a higher exchange rate for the RMB rather than depreciating the RMB. I think factually it's just absurd. And not only that, the impact of naming China a currency manipulator when it's not justified by fact can be looking at many countermeasures from many places. And it's just factual.
Ping Kang, what do you think of benefits of American enterprises in China? Now, allegedly, China has helped to create 1 million jobs despite the huge trade surplus in favor of China, and 40% of the benefits have actually been taken away by American multinationals in the Chinese market. Do you agree?
Well, I think that the interlink between the two economies, particularly through this the trade linkage, is always very helpful to both countries. And I think that the recent negotiation between the two countries on the trade forum that really has already sending very healthy message to the enterprise in both countries that don't have to worry these two issues too much. And I think that as long as the leaders of two countries are having some kind of consensus agreement to help the trade between the two countries, I think that it's always be helpful to the business sector.
Thank you so much, Ping Kang, for being with us. Now, gentlemen, what do you think of another major indicator of the Chinese economy? What do you think of the recent sluggish stock and bond performance and poor liquidity in the capital market, despite the higher than expected economic growth rate in the first quarter? And then this question should be followed by why prices are dropping in the property market. First of all, Paul.
Well, I think what you see is the stock market's down about 10% over the last month, and the liquidity seems to be being drained a little bit out of the system. And I think that's probably prudent. It's all around trying to reduce the level of debt in the economy. And by when the central bank reduces its loans to banks, it encourages those banks to not extend additional credit, which can reduce the property price bubble. because it's not so easy for a real estate developer to get a loan from a bank if the bank's worried that it won't be able to get the funds from the central bank to be able to do it. So I think this is actually working as designed, and it's going to slow the economy down a little bit as the economy deleverages.
But in terms of property prices, I think it's a good thing that it's come down from the heavens.
Charles, excuse me, hang on. Do you know this guy, Cao De-Wang, who made a heavy investment in the Rust Belt in the hope of creating many jobs for President Trump? He said recently in an interview, he just has one property in mainland China. He says there's been a lot of bubbles in the property market. He says there will be drastic decline in the housing prices, and that will trigger systematic, if not avalanche, financially. What do you think of the sensation of his prediction?
I think it's more sensationalism than anything else. The population is here, and the growth in terms of wages, in terms of income, in terms of asset in China for the middle class is here. China now is over 50% urbanized, so the demand for housing will always be there. The question is whether or not it's viable. One of the biggest issues that we've had in the Chinese property market has been there are too many speculators in the market. They're taking it as buying and selling stock, and it's a stock that rises in value, and you buy it and you sell it, and you speculate on the basis of taking out a mortgage, and then you can leverage your return. So if people or investors move away from that, prices will come down. And people are moving away from that.
In fact, the authorities at different levels have started to tighten grip on the housing market,
Right.
Dampening the prospects of any further investment or return of such investment in the housing market.
Speculation.
Exactly.
Dampening speculation. Yes.
In a sense, China ended up in the same situation the United States got into in the 80s and 90s, where real estate just kept going up and everyone felt it was the best possible investment and leveraged a lot. I think China's taking some steps to make credit less available, hopefully early enough to avoid the kind of housing crisis that the U.S. faced.
What do you think would be the major driving force for the next quarter?
Next quarter is very, very difficult to say. But I think if we look at the numbers from last quarter, I would not agree that it is the U.S. which is recovering, because the numbers of U.S. GDP for last quarter was actually substantially below what the projections were by the office's management budget, and much lower than Wall Street. Europe has really come back, and come back with full force. The unemployment rate in Spain has dropped by 40%, and the economies of many European countries are coming back.
What about the internal driving force, Paul, very quickly?
I think in China, I think it'll continue to be e-commerce is one of the big leaders, and I think consumption is expanding. I think we are seeing a rebalancing in the economy, and I think that will be a driver. I don't know how much about short term, but I think in longer term, that's what the main driver in the economy is going to be.
Whether domestic consumption will be effectively stimulated largely depends on whether there's been hikes in our salary. That's Great Expectations by Charles Dickens. Thank you so much for being with us. Until next time, goodbye.